This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Welcome to the show. This show is about Spider-Man. Now, this show is about superheroes. And as you know, all superheroes have a superpower. And in all honesty, Spider-Man is my favorite superhero. Not because he shoots webs, he actually makes those. I don't know if you know. I don't want to ruin the whole story for you, but he has that tingly spider sense, and that's just badass. No one sneaks up on you. It's super cool. But we're not here to talk about Spider-Man. So, what we are going to talk about is an investor also needs a superpower. So, what would that ultimate superpower be for an investor? And we actually have an answer. We're not going to make you wait for Andy Tanner to tell you. The ultimate superpower for an investor would be to predict the future. I think everyone can agree with that. I can't even tell you how much money I'd make if I could predict the future. So how can an investor do that? How do you, as an investor, predict the future? We have a guy who knows the answer. So let's bring in our Rich Dad advisor, Andy Tanner.
No pressure there. My gosh, I didn't know I had to have a superpower today.
Yeah, no, Andy, all you got to do.
Tingling right now. I'll tell you what. Every time I'm with you, Greg.
Just give everyone listening or watching, this is all you got to do. Give every single one of these people.
But how do you get the superpower? Huh?
Yeah, give them a superpower, man.
Well, there's truth that, we all have a desire to peek in the future. Whenever people ask me about predicting the future, I date myself with Michael J. Fox in Back to the Future, where they have a flux capacitor. And if you get that thing in a DeLorean to 88 miles an hour, you can go to any time you want. So time travel would be one way. And there's I don't know how many sequels there are, but the villain in that movie is Biff, the mean bully guy. And in one of them, he becomes ridiculously rich because I think he sneaks in the DeLorean somehow or something, and he goes in the future and he gets a sports almanac. So now he knows every score and everything, goes back and starts a casino business, becomes ridiculously wealthy. So the idea of looking into the future is attractive because, knowing what's going to happen in anything is going to give you a massive advantage. I think it's funny. I don't think Warren Buffett called himself, took on this moniker himself, but someone once called him the Oracle of Omaha, as if he could see in the future. So, I wish I was a mutant. I wish I was an X-Man that had that superpower. And I wish all of you listening did too. It'd be better if it was just a magic superpower. But we know that Superman is a myth. It's a comic book. But with that said, are there things we do that are practical, that are not imaginary, tarot cards and astrologists and looking at the stars and, tea leaves? Are there things that are non-superstitious and non-fictional that we can do to gain insight on what is likely to happen? The answer to that question is, yeah, there's a lot of things we do. And so it'll be a fun episode to talk about for sure.
So we're not going to read the book of Revelations to figure out the stock market. No.
That's not light reading. So I should probably do better with that, but we're gonna go with some facts here. So here we go. Policy and demographics will give you the future. Part of the reason that there's such division in the world, and particularly in my home country, the United States, there's incredible division to a degree of vitriol that is so unfortunate. And it's because policy determines how things will be. In other words, when you set a policy, you very much determine what will happen in the future, for sure. Where money is allocated, laws that are put out there shape our future. So as investors, we pay very, very close attention to policy changes, because it shapes the future. I'm less political. Traditionally, Robert's been pretty neutral until recently. He's become more involved in politics. Me, I've remained very neutral. My preference is just give me the data and tell me what the rules are, and I'll position myself. Because for me, the stock market can go up, down, and sideways, and I don't really care which one it does. So just give me the rules, and I'll try to determine which one of those I think it might be. Position myself. If I'm wrong, well, I need to hedge and change. And so policy is of great interest to me, not as an advocate, but as to being informed what's going on. Now, as a patriot, I certainly have my political opinions. I value my freedom. But I can spend all my time being a patriot, but when it comes to investing, I take off that hat and I say, what's the reality I have to live in, even if I disagree with it personally?
So Andy, yeah, it makes total sense. But for an example, Biden, he's been called the green president, and he's supposedly putting forth a lot of green initiatives, and from my understanding, he's helping to lower the cost of green businesses and help them become more financially healthy.
He's not lowering the cost of anything. I mean, things cost what they cost.
Well, I mean, capital.
Subsidize and have taxpayers, supplement that cost, or he'll say, hey, we'll make you pay less taxes if you do this and that. So it doesn't really make it cheaper. It just means that you might pay less taxes or get a subsidy or get a break. But I will tell you this, what we're talking about here is policy. It's called fiscal policy is what you're talking about here. And the government, Congress and the president have, said, hey, let's do a couple $1 trillion here to do this. Now, this is astounding. If you go back to Bush, the second Bush, he's the first president to accrue a $1 trillion deficit, which is astounding. In the Obama years, that got under control. Well, it didn't get under control, but it got cut almost in half to where we had a $500 billion deficit, still very sizable. In the Trump years, we went back up to $1 trillion. And now we're facing about a $3 to $4 trillion deficit, and we're borrowing and spending money like it's going out of style. And this policy is very important because there's something called modern monetary theory that we could do a podcast on someday, but they're very much embracing the idea that the deficits don't matter anymore. That's a big change in policy, and it could be in for a big change in our future. The other policy to keep your eye on is monetary policy. So you have Congress who comes up with fiscal policy, and you have the Federal Reserve that comes up with monetary policy. And you have this happening all over the world. You have the European Central Bank, and you have the European Union. And what's weird about Europe is you have a central monetary policy with a union, but individual fiscal policies from Greece and Germany and France. And, you have Brexit people that want to do their own both. And it's kind of a mess. So as you watch policy, you can predict, you can come up with some predictions on the future. Here's a good example. You have, 80 million, 70 to 80 million baby boomers in the United States who have a policy that say they have to take distributions from a 401k at age 70 and a half or 71 or whatever they've changed it to. That means that they'll be selling in the market from those people. That's a predictable part of the future that we can see. Like you mentioned, the green stuff. If you're going to subsidize that stuff and you're going to give or give tax breaks to that stuff or fund that type of stuff, wherever you're going to allocate money to, certainly we're going to see changes there. So policy is one way we pay very close attention to it. And I was speaking with. I get the chance to talk to a lot of people smarter than me. I've interviewed a couple of PhDs this week and guys that have been in the International Monetary Fund, senior advisors in these large institutions. And what's interesting about those guys is they say, the world's run by regular people that might not even know what they're doing. But the policy, in speaking to these guys, he said one of the problems with policy is that the electorate at large in most countries are not literate financially to really weigh in a meaningful way as to what trillions and trillions in deficit spending can do to their savings, and of what multi trillions of dollars. We've had a 25% expansion of the money supply in about 8 to 12 months. Think about that. A 25% expansion of our money supply. It took us till 1980 in the history of the United States to get to 1.5 trillion in money. It took us till 2019 to get to 15 trillion. So we had a tenfold increase from 1980. It increased tenfold from 1980 to 2019, and then in 2020 we had $5 trillion put in there. So it's astounding, the policy and what this will do to inflation, what it will do to savings. So one thing to do is to study policy and understand what accommodative policy does for inflation and what tightened monetary policy does for deflation, and the play of fiscal policy between the two. That's a great way to get an idea of what's coming down the pike.
So, but how does the common investor take that knowledge and use it, in the stock market?
Well, if you were to take a broad idea of inflation or deflation, let's not look at individual stocks or individual assets right now. Let's just look at a policy that would cause general inflation and general deflation. Think about this. If I am watching the Fed and Jerome Powell comes out and he says, our goal is 2% inflation. That's what we're working for. Well, if that's successful, that means you're going to lose 2% of your savings every year. So in 30 years, what does that do to the buying power of your savings? Make sense?
Yeah.
So I take that idea and I say, well, maybe I use debt because that's going to make debt way more valuable to have, and I become a real estate investor. Because if I believe there'll be inflation and I can get a fixed payment, that means rent should go up by 2% and housing prices should go up a minimum of 2%, where my payment stays fixed. And if they overshoot that goal, which is likely because they use very blunt instruments to try to tweak that. He set a 2%, and he was having a hard time fighting deflation and keeping that 2% target. They couldn't do it. Print. Now it looks like they might have 6% inflation. They overshot it by 300%. So if I understand inflation, deflation, I say, hey, I'm going to invest in real estate. Now, if I believe in inflation long term, I invest in dividend stocks, because they get, just like real estate, if you have fixed debt and you have higher sales, well, that's just a business. All real estate is a business, and the service you provide is housing. That's it. So if I'm selling Coca-Cola and I'm in the Coke selling business and I get a fixed amount of debt to run my business and the price of Coca-Cola cans go up, I get the same benefit. So it's really no different. So if you believe in inflation, buy assets like real estate, stocks, and grow your business. Now, if you're afraid of really big inflation, you probably want to have some commodities like maybe some gold, some Bitcoin, and maybe you buy some options on some futures in the commodities market. I've certainly bought some options on some commodities like consumer staples. So the way I look at it is I can take an ETF like the XLP and I can say, I think there could be inflation.
Okay, XLP is?
That's the consumer non-discretionary staples. It's stuff that you have to buy, things like paper towels and hand sanitizer and diapers. There's discretionary, which means a Rolex. There's non-discretionary, which means you don't have discretion. You gotta have it. So things like food and consumables. Why do I do that? Now let's show you, is that a perfect science? Well, let's do more things about predicting the future, and then we'll talk about the flaws in predicting the future.
Okay, so just to warn you ahead of time, I do want to dig a little deeper. You mentioned the 401k at 78. How does an investor use that information? I want to dig in. I want to know this stuff.
Robert would be mad at us right now. Quit getting into details, right?
That's what investors do. Robert talks.
Right,
yeah, you're my stock guy.
So we'll talk about some of that policy. We can drill down into some of those policies. Let's circle back to it though.
Yep.
Another way that I will predict the future is, if I could give people 3 ways to do it. First, pay attention to policy. Second is history tends to repeat itself. if you look at patterns of history, we don't study it, and so we're doomed to repeat it. And history is very predictable often. And so if I look at what happens to an economy under a certain policy in the past, I might be able to look at that in the future. Now, there is always a caveat to this, and every investor, performer, it escapes you when they send you out the information on a mutual fund prospectus. Every prospectus says past performance is not an indicator of future results, right? And that's very, very true. And the reason they say that is because it often is a predictor of future results. It's not always one, but it often is. And people need to understand it's not always that way, but it often is. If I do a fundamental analysis and you send me your financial statement, and I see that over a period of years, you've had growth, you've been solvent, you've been fiscally disciplined in your household, that could change, but it's more likely to stay the same than to change. If I see a pattern of a lack of discipline, I see lots of liabilities, I see no discipline in our spending or in our asset buying, that could change, but it's not as likely to. So I'm going to extrapolate behaviors out. How do you decide if you can trust someone in the future? How do you predict someone's trustworthiness in the future? Well, have they kept their promises in the past, right? If you are a 3, 4, 5 time reoffender, when you get out of jail for the 6th or 7th time, the chances of going back there are probably pretty high. But a person who's never been to jail and he's 60 years old, and he's probably not going to wind up there in the last 40. It still can happen. And please understand, it's not a superpower. We're doing the best we can without the superpower. So we have policy, and demographics will give us a future, but we also look at history and see how it tends to repeat itself. And those are powerful ideas. The third thing I would say is to look at a trend. And what a trend is really a direction and a velocity. So all you physics guys can get excited out there right now. Is if I see something traveling in a certain direction, Newton says that something that's moving through space will continue to move there until it's hit something else by an opposing force. And then we have things like momentum, which means how fast is it going, or how fast is it accelerating even. Well, if you're Randy Johnson and you're on the mound and you're throwing the ball at me, I have to, it's going so fast that my mind and eyes, I can't really see the ball. I have to predict where I think it's going to be and swing there. If you're really a Major League Baseball player, you're predicting where that pitch will be. Not where it is now, but where it be, based on its velocity and trend and trajectory. Now, maybe a bird flies in front of it and we blow up the bird and there's feathers everywhere, right? Maybe it rains, maybe the wind blows, right? Whatever can happen. But looking at a trajectory of something can often tell you where it's likely to continue until it hits an opposing force. So there's an old saying that says, trade with the trend. The trend was your friend. Don't fight the trend, because that's often an indicator of where things are going presently. That changes. Things go up and down. I get it. But those are some of the things we do. Fundamental analysis is a huge help in trying to determine where a company might go. Warren Buffett, his Oracle is really very, very much like Robert's BI triangle. Does this company have a good mission? Who's their leadership? Is their team in place? Are they cash flowing? Do they have a plan for cash flow? How do they communicate? Right? What are the systems that they have? McDonald's has great systems. Coca-Cola has great systems. Do they have legal problems, or are they strong legally? The product he invests in battery companies, insurance companies, Dairy Queen companies, people. Think about Buffett. He sells underwear, he sells milkshakes, he sells batteries, he sells furniture, he sells insurance, he sells banking services, credit card services. All of these things, he doesn't have to be an expert in all those. He just looks at the financials and says, this is where I think the future will go for these guys. And he's not always right. So, as investors, there are things we do to try to predict where things might go. But as you know, Greg, there's 4 pillars to investing, not 3. The first 2 pillars of investing are fundamental analysis and technical analysis. Let's break those down into 3 or 4 areas. When it comes to fundamentals, I'm going to do this on 3 levels. I'm going to look at sovereign fundamentals, which has to do with this policy. Monetary policy and fiscal policy have to do with the sovereign fundamentals of my country, the United States, and every other. So that's part of my research to get a gauge of what the future would be. Second is corporate fundamentals. I'm going to look at Apple. I'm going to look at their financial statement. I'm going to look at their history. I'm going to say, does it look like this could continue? If they had a pattern of innovation, have they had a pattern of growth? Then I'm going to look at my personal fundamentals. And you say, Andy, where are you and Marcy at? What is the trend that you guys are following? Have you been having better and better years or worse and worse years? How have your investments performed? And how do you need to tweak that to keep the future controlled? And then finally, I have my technicals, my second pillar, and that's on a broad scale. I can look at broad market technicals, big global type trends. I can look at things like, for example, inflation. If I see fundamentals that say we should have inflation, huge deficit spending plus huge money printing usually equals inflation. Well, now I watch my charts and I say, is it becoming manifest, for example, in the personal consumptions? You have CPI, which is consumer price index with no food or energy counted. You throw it in, you get what we call personal consumption expenditures, PEC or PCE. And personal consumption expenditures, their trend is rising like crazy right now, month over month, not year over year. So we're starting to see inflation, come in there. We look at the futures market, which is in mostly commodities backwardation, which tells me maybe people believe that it might be transitory inflation. They might be listening to Jerome Powell. So these are the things that help me try to get a win in the future. Now, the last 2 pillars.
Wait. I got 2 things for you.
Yeah.
My producers tell me I got to stop. We actually have a small commercial break.
Oh,
so yeah. We'll get to your 2 pillars. Well, you'll be surprised who they are. We'll get to your 2 pillars in a sec. But before we do that, it sounds like the future technique of policy blends in with the third technique of trends. Is that fair?
Yeah, I think it does. We try to see when the policy actually is manifest by watching it actually happen in the trends and in the numbers. When we see it set up and we see it manifest in the trend, that really makes me think, wow, what we thought would probably happen is starting to. It bolsters my belief that it could happen.
Okay. So we'll get to pillars 3 and 4. We actually, this was based on, right. A lot of the comments are asking you to talk about crypto and all those things. So my producer asked me to mention that Rich Dad does have a cryptocurrency newsletter. It's by Robert's personal cryptocurrency expert who he talks to. So in the show notes, you can get a link to that, blah, blah, blah. But he's also,
sharp, by the way, we did a podcast with him. He's sharp.
He's crazy smart.
Big fan.
So the second one, Andy, is actually your partner. He wanted to get in a little plug for your product, which you're actually talking about right now, the 4 pillars. But it's a genius product. It really covers all the assets. I actually used all. You hate those type of words, but almost all the pillars you need for investing. And then you actually get into a lot of the details of how to apply it to your stock market investing. So I need to also let people know that's in the show notes, a link to the course, but also there's other links to your free webinars that people can get training on. So Andy, those are your 2 commercials for you. Right
wow,
there.
That's pretty good. I'm pretty impressed. We have commercials now.
Huh? Yeah, I never done a commercial before.
But it actually was timely because it is those first 2 pillars that help us gather data. How do you predict the future? You look at numbers, you look at data, you see where things are moving. That's the closest you get to the superpower. I would caution against supernatural illusions of gut feelings, tarot cards, advice from your brother-in-law, palm reading.
Now, I will say that Robert says you should listen to your gut, but then you should always verify it with the facts.
I believe there's been a lot of neuroscience on gut instinct that it actually can make sense because you have perceptions, but it's not magic, it's science. And if we start and get into magic, you're in trouble.
Fair enough.
So once I have this data, how I position myself is the cash flow pillar, right? And so you have the people ask about crypto. Okay, I see mass inflation. I think the dollar might go down. Maybe I see crypto as a haven. I have some crypto. I have exposure to crypto. It's my least favorite investment. I don't like crypto. Robert loves it. Me, I think it's man-made. I think the government is still in control. I think trying to subvert those guns and jail and policy and taxes. As soon as the government decides they don't like crypto, they'll just, make a policy that tries to kill it, right? They haven't done that yet. But I'm in crypto. I'm in crypto as reluctantly. Bottom line is, whether you buy it reluctantly or whether you buy it enthusiastically, it doesn't matter. We're both in the same position. You follow? Right. Because I feel it's a thing, and I feel being prepared for that is one place to mess around with that asset class. Now, let's talk about the flaws in the superpower. Okay, things change all the time. So here we're talking about predicting the future, and you must do that, in my opinion, with this reality. You could make an argument, you really could, that you could make a real good argument that the defining characteristic of the market is unpredictability, which is the reason that people want the superpower so badly. You follow? Yeah. Because the market is so unpredictable by nature, it would make sense that the holy grail is the guy that can predict the future. That's why people that advertise piss me off. They'll say, oh, we picked winners 87 weeks in a row. It gives a false sense that they have some ability to see something that you can't. And that's simply not true. The data is out there, especially in stocks. It's all publicly traded. They report it every quarter. Everyone's going to see the same data. Warren Buffett is not a perfect oracle. Every single year he comes out in his letter and says, here's the mistakes that we made. Here's the things we didn't see coming. Here's where we paid too much for Kraft Heinz, whatever he might say. So if the defining characteristic of the stock market is unpredictability, how do you deal with that in all these predictions? Now that would be really valuable, wouldn't it? Since we can't really have the magic superpower, we do these things to try to predict. But if you could deal with it when you're wrong, then you're really good. And that makes me go back to my Boy Scout days. I'm an Eagle Scout, unmolested. I had never any problems with that stuff. And
we're so happy for you.
Yeah, you used to be real proud of, I got my eagle up here somewhere on my thing somewhere. It's up there. I got my eagle up there, and now people are like, oh, did you make it okay? It's a shame because we worked hard for that eagle. They have slogans, they have oaths. The oath is to keep myself, physically strong, mentally awake, morally straight. The slogan is to do good, to do a good turn daily. But the motto is be prepared. And that is how you deal with unpredictability, is you are prepared. So let me put it to you this way. And in Robert's book, can I do a commercial for one of Robert's books?
Sure.
He has a book called The Unfair Advantage, and he was very kind and had the advisors write in that book with him. And in my section, Robert talks about the difference between amateurs and professionals when it comes to investing. And this is a real key, is amateurs predict and professionals prepare. Here's it. Is your house going to burn down today?
I'm going to hope not.
You're going to hope not. But okay, so your prediction of the future is your house will not burn down today. That's your prediction. Okay, I think, and you're basing that prediction probably on trend in history, right? Probably on trend in history. It hasn't done it so far. There's no smoke here. My neighbors don't play with matches. Lightning isn't striking in a blue sky. I don't see any history of fire in my neighborhood that's brutal. I'll probably, okay. Do you have home insurance?
Yes.
Why?
To be prepared in case it does happen.
In case your prediction is wrong. If you thought the house was burned, if you really thought your house was going to burn down, you should buy a different house. If you think the one you're going to buy is burning, so the investment is true. We would never buy an investment we thought was going to burn down, but they can burn down. And so we prepare ourselves with what's called a hedge. We take a small amount of money, right? A small amount of money, and we prepare. So let's talk about hyperinflation. I'm not yet betting on it, I'm trying to prepare for it. I'm betting on inflation. I haven't bet on hyperinflation yet, but I am preparing for it. Let me show you what I mean by that. I'm betting on inflation because I'm buying stocks, right? And I believe dividends will rise. I believe the stock market will rise under these policies. And that's been the right call for most people, is to be in stocks as the Fed has printed all this money.
You're saying stocks. Do you mean dividend stocks primarily, or any stock?
Any stocks there. I prefer dividend stocks because I think dividends benefit from inflation as well. Just like real estate cash flows would increase with rent increases, I think that price increases of goods, like lumber right now, do you really think it costs them 10 times what it used to make and harvest? Did those workers get a 1,000% raise? No, they're benefiting from higher, plywood's $58 a sheet in my neighborhood right now. It used to be $18, right? Those workers did not see the same increase in their salaries that harvested the lumber, right? So I love dividend stocks, and I think long-term inflation is a benefit. And if the Fed can pull off 2% a year inflation, that means savings kind of sucks at 2% a year and investment does great. That's a 4% swing right there. And if you pick the right ones, it can even be better. With hyperinflation, Robert is predicting that. I think it's a possibility like having the house burned down. I do. I think it should be. So I look at the futures market right now. Let me give you an example of wheat. I haven't looked at it. I want to say it's probably about $400 to get a future right now. And that means that you get 5,000 bushels, like a train load. Well, those are in a term, I don't want to get too jargony, but the futures are in what we call backwardation for many commodities, meaning that I can make a promise to buy some wheat 2 years from now for less money than I can buy it today. In other words, they believe wheat is expensive today, but it'll be less expensive tomorrow, which tells me the market at large is listening to Jerome Powell thinking it's transitory. Well, I'm not so sure they're right. The market and the herd have been wrong before. I've seen contrarians make money before. Well, I'm not ready to go out and buy some futures and bet on that. I'm not ready to yet because I might be wrong. It might be transitory. They might be right. But if it's not transitory and it starts to take off, I have what's called an option. I'll give you an example. And please let me disclaim the hell out of this. Don't buy stuff that I talk about without knowing what you're doing. Can we disclaim that? It would break my heart. Well, Andy's doing this. It must be. I've lost money in my investments before, and I'm planning on losing on this one. I hope I lose. But I've spent some money on options. For example, long-term, they're called LEAPs, long-term equity anticipation securities that are 2 or 3 years out. And I bought some on, for example, some staples, and some consumables with the thought that I'll pay a fixed amount of premium, just like I buy my home insurance. I have a fixed amount of premium. I'll do covered rights on that to help fund it, so I don't have to pull it all out of pocket. But yeah, I've got stuff in there that if we do go crazy with inflation, my prices now are locked in low, and those contracts will become exceedingly valuable, just like an insurance policy becomes exceedingly valuable if the house burns down. But I'm not buying those opportunistically. I'm buying those in a preparatory defensive move in the same way I buy insurance for my home and my cars and my health and my life. In the same way I'm expecting to lose those premiums and never recover them, I'm also insuring against inflation from an insurance standpoint. I'm not yet exploiting it opportunistically, other than being in stocks is a bet on inflation. Being in real estate, if you go in debt to buy real estate, it's a bet on inflation, because deflation would kill you. You'd have a fixed payment, rents drop, now you're underwater that quick. So you are betting on inflation if you're a real estate investor, for sure. You're betting on inflation if you're a gold investor. And you can also buy smaller amounts and be defensive with it. I like what Warren Buffett's doing. I wish I could talk to him. Maybe I'll have to bid on that dinner someday and see if I can get that lunch with him. I don't know if I could ever be in that league ever. But it would be amazing, because I look at his financial statement, and the Oracle of Omaha, I think, is more in prep mode than predict mode. because I see two things. I see tons and tons of stocks and companies, and I see tons and tons of cash. I see a balance in a balance sheet. And I see that if we have deflation, he's still got a boatload of cash that he can go pounce and buy things cheap. If we see inflation, well, he'll set his cash aside for a while and leave it be and let the companies that he has make a ton of money. So I think he's set up really well. And I think he sees the arm wrestle between inflation and deflation and saying, you know what, this is kind of new territory. There's not a lot of history to repeat itself. We've never had deficits this high. We've never printed so much money. We've never had a former Fed chairman as the Treasury, who used to be the boss of the current Fed chairman, who have gone to lunch together a bunch of times. We've never had this before. Maybe we go into prep mode more than predict mode. So what's my prediction? My prediction's inflation. With a chance for hyperinflation that I'm going to prepare for in about the same way I'd prepare for my house to burn down. It certainly could happen. I believe that we're going to have a huge pullback in the stock market. I can't give you the date, but as inflation heats up, we saw it in the repo market where the Fed tried to adjust the rate in the repo market, which is a tiny adjustment. They're going to have to raise the rate when this thing overheats. And when they do, you're going to see the stock market plummet. And that's going to be an opportunity for those that know how to predict and know how to go short and know how to protect their longs. So I think the market's overheated. I think that it's going to continue to overheat. I'm still long. My deltas are positive, but I am ever watchful, watching history repeat itself. Look in the charts. First sign of trouble, you see very severe candles to the downside. And I think you'll see very severe candles to the downside once the Fed is forced with no choice to get the inflation under control. Okay, they're saying they're going to raise rate. Look, policy, we're going to raise rates 2 years from now, right? Is what their policy was. So there's the future. They're going to raise rates 2 years from now. That's going to accelerate. They're going to raise rates sooner than that, in my opinion. It's just inflation's heating up too fast. I could be wrong. Might be transitory. Maybe he's right. My opinion is it's not.
So I want to recap, and then we'll move on to the technique number 2.
You can circle back to your questions that I dodged.
Well, this was good enough. Inflation, buy stocks, especially ones with dividend. Hyperinflation, futures. Keep an eye on the policy if they do raise interest rates, because that's going to be deflation, at which point expect a downturn, use your cash to buy stocks cheap.
Cheap.
Good summary there.
Yeah, I like that. I like that summary. How do you predict the future? Policy, trends, history.
Let's do history now.
Yeah.
Okay. Now, the other way, or the second way, was to use history to predict. Here's where I struggle. You ever do see baseball stats? They'll say this is the most home runs since the new stat era of baseball. All right. So are there two eras in stocks? One, say depression time before the Fed, and then since depression time after the creation of the Fed, because now you have a manipulating power source. So when you say look at history, are you only looking at since the creation of the Fed, or does that not even matter?
You've got a great point. There was a time where no one in history had ever broke a 4-minute mile. Everyone who ever tried couldn't do it. And so you'd say, well, history's going to repeat itself. And all of a sudden someone breaks a new mile. Is that kind of what you're talking about?
Yeah.
And so you have the post era of the 4-minute mile. So absolutely, it's not a superpower. Everyone would love to have a cold, hard, solid thing that doesn't slip through their fingers, that they can build a foundation and bank on. That's why people think jobs are a good idea. I go get a consistent paycheck. I do the same crap every day. Investors, we become very adept and very comfortable with quicksand and fluidity and having foundations fall and sand. We build our house on sand a lot when that happens. What I mean by history repeating itself, though, there's also enough repetition. If you look at the 4-minute mile, well, there was a time where no one could break a 5-minute. And then someone got it in 4.5, and someone got it in 4:45. And so you saw what? You saw a trend there, and the history is it's getting better and better. So in almost any stat, Kareem Abdul-Jabbar, he has the most points. LeBron has a shot. He has a shot to pass him. People say Stockton's assists and steals will never be broken. Give it time, because the trend is athletes get better, things get better. And the history's shown that it does get better. So yeah, I understand what you're saying, that it's probably not perfect. But if someone, if some dude is on his 7th divorce and your wife number 8, your chances aren't good, are they? Now, maybe it changed. Maybe you just had 7 bad apples and he's a saint. Maybe, but the history suggests otherwise. So please understand, it's not a perfect science. If it was, everyone would be a billionaire, right? Everyone would be. It's not a perfect science, but we do the best we can without having the superpower.
All right. And then prediction technique 3, which is trends, which to me, I think we already said prediction technique 1 is the policies is in trend, but now we've just combined prediction technique 2, which is using the history to see the trends. Both of that, I mean, that makes total sense. But here's my question. You're talking trends over a long period of time, but do you also mean like they have, okay, I'm going to butcher this, but they have trends like the dead cat bounce. So are you also talking those kind of trends where when you see a certain pattern in a stock, you can reasonably expect it to?
I think that's more, candlesticks and, dead cat bounces and all that type of stuff is basically historical. We say, well, this is when we've seen these in the past, this is what happened. And
okay, so that's technique 2.
Yeah, I don't buy into that hugely. I pay attention to it, and it's worth studying for sure. Worth studying. A doji means things often. It more gets my attention than gets my money. In other words, if it were a superpower, it'd get my money. Since it's not a perfect science, it gets my attention. I say, well, here's another factor. If I line up more and more factors, right? More and more historical factors, more and more policy factors, more and more, you're really like an attorney building a case. You're building a case for your money to go somewhere or get yanked out of somewhere. And it's an imperfect science, so you do the best you can. This is why the 4th pillar is critical. You've got to have risk management, because the defining characteristic is you're trying to predict the unpredictable. And so if you have if we had a perfect prediction science, we would not need the 4th pillar. We wouldn't need it.
Right.
The 4th pillar actually is the most important one, because it's about preparation. Those who are prepared, Boy Scout model, be prepared.
Yeah. Wait, I want to clarify this.
Hope for the best, prepare for the worst.
So we've talked about 3 prediction techniques. But then, just so you guys don't get confused, there's also the 4 pillars. So we started this show talking about the 3 prediction techniques, but now Andy's talking about the 4 pillars an investor needs to understand to be successful. So I just want to clarify that there's not a 4th prediction technique we're talking about. We're talking about 2 separate things. The 4 pillars, which is what your main course is about. It's awesome. We did the little commercial for it. And then the 3 prediction techniques, which is what this particular episode is about.
That's right. And so we need to have risk management, right? Because it is an imperfect science. It'd be nice to have a DeLorean. It'd be nice to have a flux capacitor. That's why we go to those movies. Those fantasies make us feel good. Wow, I'd love to have that happen. Not going to happen. Warren Buffett's not an oracle. We don't see into the future. We look at data and we position ourselves based on that data. But we also have a plan B, plan C, insurance exit strategies, position sizing. We have all kinds of techniques to say, what if we're wrong? And I think that's one of the best approaches to investing you can have, is you build this huge case to put your money in, all these reasons why, and then you flip it and you say, all right, let's play the devil's advocate. What if I'm wrong? Because I often am. What am I going to do? And your ability to do that second part of saying, what if my prediction is wrong, and preparing for that is a huge advantage to the investor. So it's a fun topic.
Yeah. So, and then we're going to end this, but in the risk management, you once taught me in one of our very first conversations. So I don't know, 10 years ago, that one of the beautiful things about the stock market is its agility. As soon as you see one thing, you can sell your stock, you can buy more stock, you can buy options, you can do anything super fast to protect yourself and adjust to what you're seeing.
Yeah, I mean, the high frequency trading, these things are done in nanoseconds now, right?
Yeah.
Done in nanoseconds. You can react so quickly So one of the advantages of being in paper is you can get rid of stuff. You can, you can sell physical gold pretty quick. You can go down, you don't get a great price for it, but you can go down and sell it to a gold dealer. You can liquefy it. It's tough to sell real estate quick. It is tough and get a decent price. I mean, I guess you could sell anything quick if you drop your price low enough. But stocks are very agile. They're very liquid. Click, you're out. Click, you're in. It's really fast. So that is a benefit.
Well, Andy, thank you. I hope the listeners feel they got an inkling of a superpower here.
Well, I don't have any superpowers. I'll tell you this, though. What's Superman's greatest superpower? We'll end with this. This would be a good ending, I think.
I'm going to say invincibility.
His greatest superpower, it's just an opinion. I'll prove
Sure. Go for it.
His greatest superpower is his heart. Because if his heart wasn't right, he'd be a villain. And he'd be a real powerful one. All of his power goes the wrong way if his heart isn't right. And so, my hope, that's a good ending, because if your heart's right, you're going to have a good life regardless of what the market does. So have a good heart. And that's the best superpower you can control. Choose to be empathetic, choose to have a good heart, choose to serve. The trend I see over the long term is the human spirit is indomitable. And we make mistakes, and we have wars and depressions and greed, and we set ourselves up for failure, and we learn lessons that are very severe. But the big trend in the future is we always tend to rise up. We always tend to love each other and lift each other and want to make life better, want to invent cool stuff, solve problems. So whatever severe crashes we have, it seems that the long-term trend is we always figure out a way back up. And I think that's the optimism and brightness of the future Warren Buffett has. He says, hey, never a better time to be alive. You can start a business so easy right now. So make sure if your heart's right, you'll be okay. That's a superpower everyone can have, and it's a superpower everyone can give every single day. Better than predicting the future.
That's a great way to end the show. So Andy, once again, thank you.
All right, man. Thanks much.
Bye.
See you.